On today's episode of the Cryptoverse, it's becoming increasingly clear that the news from China is what's hitting the Bitcoin price the hardest. So here's an update. Dash is the privacy-focused digital currency that offers transactions with instant confirmations. Its unique decentralized decision-making and self-funding system make it an ideal choice as a stable and secure digital cash. Click the link in the video description to learn more. Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. I am your host, Chris Coney. Today is the 12th of January 2017, so let's do the normal market roundup, look at the Bitcoin price chart, and then a bit of news. So for the cryptocurrency prices then, we turn to coinmarketcap.com. Quite frankly, most of the top 20 is down and down significantly today. We've got some 12s, some 14s, we've got a few 12s actually. The only two coins that are up on my screen in the top 20 are Ripple and NEM. NEM is actually the winner of the day, up just 2.29%, and it puts a NEM coin at, well, 0.35 cents per token. And NEM is it's a very Dash-like cryptocurrency, and it's trying to be a currency. So check out the NEM website, and you can see that I think they've taken a lot of influence from the Dash model. So that's why I say it's a Dash-like currency. Anyway, biggest loser of the day, it's hard to call it because there are some big fallers today. Like Monero down 11.75, even Bitcoin down 12.18. We'll have a look at that in a minute. But the biggest loser is Ethereum Classic, down 14.02%, putting an Ethereum Classic token at $1.14. So I'm not going to dwell on this. I've got a lot to say about the news today, so let's move on to the Bitcoin price chart. So in terms of the Bitcoin price then, we always tend to bitcoinwisdom.com and look at the Bitstamp chart. Well, what can I say? I'm absolutely gobsmacked. The price has continued to fall, and it has broken on my chart a key support level. If I just keep the screen on the broad view here, you remember the other day I redrew my Fibonacci retracement lines. So on the weekly chart here, I drew it from the very top of the Bitstamp price, which is $1,163, and then I put it right at the bottom of the crash, which was right down at 152. So the good thing about that is it's based on a large move, and it's based on a large amount of data, which should increase its accuracy. So then when we go back to the daily chart, you know these key retracement levels where it literally retraces the steps, because it always goes in cycles, down and then up. So that big move down, it leaves a trail of key support and resistance lines that will be touched upon when the price goes back up on its way back to wherever the top of the retracement line was. So one of the key support lines I was looking at here it's called the 61.8% Fibonacci retracement line. That's when we've retraced 61% of the price crash. That line actually sits at $776.95. And you can see historically here, back from like December of last year, the price was sort of squeezing up against that. And then when it broke it, it began to take off. So that to me verified it as a significant resistance line, because as soon as it broke that, all the pressure that was waiting to be released was released. And that took us all the way up to 1,139 recently. Now, that's cool, right? But whenever resistance breaks, it normally flips and it turns into support. So when the price came back down again here yesterday, I was like, well, fair enough, we broke down below 900, fine, we broke down below 800, which were again psychologically significant. The thing that I was flabbergasted by was I was like, surely 776 will hold, just because it's a Fibonacci retracement line. It was confirmed by all of that interaction there that I spoke about from last year. I talked about the 50-day moving average being a support line, broke all of that, and is now sitting below the Fibonacci retracement line at $765 dead. So that is a significant dip. In fact, if you look at the volume yesterday, there was like 35,500 Bitcoins traded yesterday in order to create that well, it's actually nearly 14% price decline. And the only time recently where the volume was that significant on Bitstamp was when we had that 10% drop on the 5th of January, when roughly the same, 35,770 coins was traded on that day. So that's another one of those, panic sell things that was going on there. I didn't do anything. I actually bought more Bitcoin during these crashes, which I'm going to talk about more in a moment when we get to the news. So my position on all this remains the same. If you believe in Bitcoin's fundamentals, right, if the price crash was because, the Bitcoin encryption broke or something like that, like a fundamental flaw in the technology, then of course I would be one of the first people selling my coins, right? But I haven't heard anything like that. It's not to do with the fundamentals of Bitcoin. It's to do with perception, right? It's the perception of the market, and that's fear, doubt, uncertainty, the news, which is just all in the mind. It's got nothing to do with objective reality, which is the technology itself. The technology continues to improve. The ecosystem continues to evolve. Adoption continues. So if it was purely fundamental price, like we talked about the other day, the real market value, then there would be no problem. But it's because of all the perception and all speculation that causes all these bubbles and busts, right, which just gets on my nerves. But anyway, let's move on to the news because I'm going to talk more about this. Before we get into today's episode, though, I want to make a quick mention or a follow-up from something I said yesterday about a rumor about Litecoin potentially adopting segregated witness to help it scale. Now, it turns out this is in fact true, and it's not only true of Litecoin, that several other altcoins are also working on integrating segregated witness into their technology. So that's because a lot of altcoins are also based on Bitcoin's code base, which means that many of the scaling solutions, like you see here, these BIPs, I think that stands for Bitcoin Improvement Proposal, and all of these improvement proposals are numbered so that you can say, oh, BIP 66, and you can go look up what that is, right? And all these different open source and community contributed suggestions on how Bitcoin can be improved, right? So as long as the majority of your altcoin's code base is compatible with Bitcoin, then these Bitcoin improvement proposals should also be compatible, even if it's only a bit of modification. Segregated witness is more of a conceptual idea of moving data out of the header and so on. And headers and the block structure of cryptocurrencies, they all pretty much share the same philosophy in the way that they are structured. So you can take what segregated witness is trying to do and then adapt it to almost any coin. Now, I personally think that altcoins thinking about integrating segregated witness is a good thing because it creates a broader democratic base for the community to vote on, right? So shout out to those who commented on yesterday's episode, pointing me to this tool, which is litecoinblockhalf.com/segwit.php. I guess this site was originally looking at when was Litecoin having its halving, and now they've added this page on to track when segregated witness is going to be activated on the Litecoin network. So a couple of quick notes about this. The first thing someone pointed out to me was that this segwit activation threshold, it says 75%, right? So that's like when 75% of the mining power on the Litecoin network flags as being, yes, we support segregated witness, that will be the point when it activates. And you can see right now, it's at 0. So 0% of the mining power on the Litecoin network is saying, yes, we support segregated witness. And they only need 75% of the network to agree. That's consensus. Segregated witness will be activated. If you've been listening to the Cryptoverse for a while, you remember that Bitcoin's threshold is 95%. It needs 95% consensus. 95% of the mining power has to stick their hand up and say, yes, we now support segregated witness for the Bitcoin network to actually activate segregated witness. I mean, to get 95% of the people to agree, I know it's not 95% of the people, it's 95% of the actual mining power. Because it's not just consensus amongst technology, it's consensus among people, and that's much harder to achieve because that's what's known as governance. Anyway, the final thing here, it says here that the segwit start and timeout time. So as of the 28th of January, the Litecoin network is going to start monitoring the miners to see who is voluntarily deciding to support segregated witness and who isn't. And then looks to be a window of 1 year. So this window opens until the 31st of January 2018, like 1 minute past midnight. So if by then 75% of the mining power hasn't decided to support segregated witness, then that window will close, and I guess that the proposal will formally be rejected. If this were to pass, though, I think it would put significant pressure on the Bitcoin community, because if Litecoin can scale, and it literally is almost an identical copy of Bitcoin, just with faster block times. If Litecoin then goes segregated witness and starts doing things like Lightning Network and free transactions and instant confirmations and stuff like that, then that's very, very dangerous for Bitcoin, because it means people can switch to Litecoin very easily, and technology can be adapted to accept Litecoin very easily. And that's just, I think that was just too dangerous for Bitcoin, because people could just easily jump ship and go over to Litecoin. In terms of the news then, today I have turned to an article from Reuters. This article was published yesterday, Wednesday, January the 11th, and it's entitled "Bitcoin Slides as China's Central Bank Launches Checks on Exchanges." So let's see what this is going to say for itself. It says here, China's central bank launched spot checks on leading Bitcoin exchanges in Beijing and Shanghai, ratcheting up pressure on potential capital outflows and knocking the price of the cryptocurrency down more than 12% against the dollar. Okay, so let's stop right there and examine a principle. I am continually staggered at how very smart people show themselves up as not being quite smart enough. Actually, let me correct that. There's a difference between intelligence and wisdom. Intelligence, you could say, is someone's raw IQ, their brain's ability to absorb and process information. Wisdom is kind of this elusive skill of knowing how, when, and where to apply that intellectual power. And government leaders, financial analysts, lawmakers, they continually make the mistake of overthinking things, which often makes the problem they're trying to make or trying to solve worse, because they just tie themselves in psychological knots. And what they forget is that they are dealing with human beings. This is where I believe I possess a superior wisdom, because I've spent an equal amount of time studying economics as I have human psychology and emotion. And to me, it's impossible not to, because it's the very thoughts and feelings of individual people that collectively make up these things that we call the market or the population. In fact, the market and the population are not really things. They don't really exist. They're just labels for groups of real individual people. So what am I getting at here? In order for people to plan, especially when it comes to their money, they need as much certainty and predictability as possible. So a very simple way to give people that kind of confidence is to communicate with them clearly and regularly and honestly. Things like fear, uncertainty, and doubt, they can only flourish in the mind when there's nothing else to go on other than one's own imagination of what the worst thing that can happen, right? So the Chinese central bank launching sudden spot checks, well, that's just the recipe, the perfect recipe to spook people into an emotional state, which then results in irrational action. And I have nothing against spot checks, because it's a good strategy to catch out companies who are doing bad things. However, they would have been much wiser to first announce the new policy that they were going to begin doing spot checks and random spot checks on the exchanges, starting, say, in a month's time or even a few weeks' time. Then, when the investigators turned up, it's within that realm of predictability and would therefore avoid those emotional triggers amongst the population. And these people in power just seem to have a complete insensitivity towards the people that they are affecting, which is likely born out of a complete lack of emotional intelligence. Anyway, moving on with the article here, it says the People's Bank of China, the PBOC, said its probe was looking to a range of possible rule violations, including market manipulation, money laundering, and unauthorized financing. Okay, nothing wrong with that. The Financial Conduct Authority does that in the UK all the time. I mean, they hardly ever prosecute anyone, even when they catch them, but that's another story. And then it says here, while the yuan lost more than 6.5% against the dollar last year, its worst performance since 1994, the Bitcoin price has soared to near record highs. And thus, we reveal their true intentions. The Chinese government simply does not like any currency competition. Well, boo friggin' who. But we covered this stuff the other day, so why am I covering it again, you might ask? Well, moving on to the green bit, it says the PBOC in Beijing, where officers visited the offices of OKCoin and Huobi on Wednesday, said in a statement that, quote, spot checks were focused on how the exchanges implemented policies including forex management and anti-money laundering, close quote. Okay, sounds like the PBOC just barged into these exchanges unannounced and said, right lads, we're doing a spot check. But what I don't understand is why the market panicked. So far, there's actually been no indication that these investigators have actually found any misconduct. So yes, while this is sudden, why get your panties in a bunch? And also it says here down in the blue, it says normally Bitcoin trades at a premium in China with a lack of trading fees encouraging volumes and boosting demand. You see, this is the root of the problem. It's the speculation that's wreaking havoc with the Bitcoin economy at the cost to the rest of us who are actually trying to rid the world of financial tyranny. There are people like me working to promote Bitcoin adoption, but there's this headwind that we have to fight against. You know, these media stories like, oh, Bitcoin has crashed, you know, and that puts people off. That creates a counter force to my promotion of Bitcoin and all its positive traits. And the average person is none the wiser. On the one hand, they've got me saying Bitcoin is fantastic. On the other hand, they've got this news story that says, well, Bitcoin's price just dropped 15%. So well, they're going to go, okay, you know, it's too much uncertainty, I'm going to stay out. And then check out this quote from Charles Hayter, CEO of digital currency analytics firm CryptoCompare. He says, the fear is that this investigation could lead to, worst case scenario, funds being withheld from them, meaning Chinese investors. Does anyone else see, that's close quote by the way, this is me talking now. Does anyone else see the elephant in the room here? What's the one thing that is enabling this whole situation to even exist? What's the one single domino that we could remove to make all of this irrelevant? Well, you've guessed it. These are centralized exchanges. And this is what you get when you try and blend the new decentralized economy with the old centralized one. You actually get a kind of lose-lose situation. You get all the bad bits from the centralized system, and you don't really get the benefits of the decentralized system. I mean, centralized exchanges are okay, I suppose, as long as they are only used to, say, buy some coins before you immediately move them into your own wallet. And do you remember the principle that I talked about in a recent episode, on the episode where I talked about turning ransoms into bounties? I said, don't blame the person, blame the system. And that's the problem here. The system we have right now is a centralized exchange system, which is the root, it's the very foundation upon which all of these things can happen, which couldn't happen in a decentralized exchange model or system. Finally here, it says in the grey, according to his analysis, this is Charles Hayter again, he says trading between the yuan and Bitcoin accounted for around 98% of the total market in the past 6 months. Well, you guys in the comments section, many of you seem to have already called this from yesterday. If what this guy Charles Hayter is saying is true, I mean 98% is a huge number. Ultimately though, having gone on this rant, these big price movements simply serve to transfer wealth from the uneducated to the educated. I mean, if you sold your Bitcoin during the recent crash, all you've done is transferred some of your share in the future world economy to people like me. So thanks for joining me today, guys. If you liked this episode, hit the like button. If you disliked it, hit the dislike button. Please leave me a comment below with some feedback and get subscribed. And please support the Cryptoverse and boost cryptocurrency adoption by going to cryptoversity.com/podcast and becoming a patron. From as little as $10 a month, you can secure Cryptoversity's future, get unlimited access to all Cryptoversity courses, and access a private patrons-only chat group where you get direct access to me. That's all for today, guys. I will be back tomorrow with another episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.